Hi Ed, thanks for speaking to us today. Can you tell me what you think makes a fund manager stand out from the crowd in Asia today?
Sure, I think there are really two things that are critically important if you want to stand out in a very crowded field. First and foremost, you have to perform. Clients demand returns. You're in the business of managing money. If you don't provide them with positive returns, you're in a bad place. Second is client service. Asian clients, Asian consumers are very different from European or North American consumers as far as their demands and client service. And to be successful in this region, you really need, as a firm, to internalize the issue of client service and do it very well and do it very differently across the region. Asia is a very big region and there are many different types of cultural expectations that need to be met.
Sure. When you say Asian investors are very different to elsewhere in the globe, can you expand a bit on that and what do you mean by that?
Well, sure. First and foremost, think about risk tolerance. It's incredibly important to understand investors' appetite for risk. When we speak to individual investors in Asia, many of them have been running very successful businesses for the last 5-10 years. They've known 20, 30, 45% profit margins every year. In the West, it's quite different. In Europe and in the United States, individual investors, their core businesses are doing very poorly in many cases. Many of them are unemployed. Many of the higher end investors have lost their jobs in the financial services industry. That creates a very different dynamic when you're talking to a client as far as their personal risk tolerance.
Sure. And where do you see some of the biggest challenges for the industry today in Asia?
Well, again, when we say Asia, as you and I know, that's quite a big footprint.
Talking about quite a big region,
From Japan on the east to Australia on the south to Russia on the north and conceivably as far as India on the west. It's an enormous footprint. There are tens of countries in there speaking many different languages and having many different cultural backgrounds. So Asia really needs to be, from our point of view, at Rogers Investment Advisors anyway, you need to break it down. You don't sell the same way in Australia that you do in Beijing. It's just not going to work. And that's different to selling again in Delhi or Mumbai and creating a product that will satisfy Indian customers. So the first piece of advice I would give when you're trying to enter the Asian market is realize that it's not one market.
Of course, yeah.
There are many, many markets, and you need to identify how you're going to succeed in each individual market.
So what you're saying is one of the biggest challenges is really getting to know each individual market. That's quite a big challenge, I imagine.
It's a logistical challenge. We chose to base our business in Tokyo. Why Tokyo? Well, one, there are clients with a lot of money, institutional investors and individual investors. Japan's actually still a very wealthy country. But two, you really do need to physically put yourself in every country in Asia that matters. You have to travel to Hong Kong, you have to travel to Singapore, you have to go to Shanghai, you have to go to Sydney, you have to go to Mumbai. And you want to be part of Asia, to be successful in investing in this part of the world, you have to spend a lot of time traveling and a lot of time on planes and be committed to the region.
Sure.
And we think that the only way to do that is to physically be based
here. Kind of foot on the ground, yes. And I'd just like to swing you to asset classes. Are there any particular asset classes that you think will dominate portfolios?
Well, I come from the hedge fund side of the business. I'm a very strong believer that the volatility inherent in Asian markets, and we've seen enormous swings for political reasons, for economic reasons. We've seen markets drop 20, 30% in a day here, going back over the last 25 years. We believe that the safest way of addressing the risks associated with volatility in Asia is through hedge fund products. And we think as an asset class, that is going to grow tremendously in customers' portfolios.
Are you seeing signs of that already?
Absolutely. The Japanese pension fund industry, the Australian pension fund industry, enormous moves into the hedge fund space. We've seen more and more individual investors get comfortable with the idea of hedge funds. And hedge funds, let's face it, haven't had a great reputation over the last couple of decades. But we have found them to be very effective at protecting downside risk. And anybody who's, I've lived in Asia for the last 25 years, anybody who's from Asia knows that some of these markets can suffer significant downdrafts at a moment's notice. And the only way to safely protect yourself, of course it's impossible to protect yourself if you're long only. If you can hedge, truly hedge, that's the safest way to invest, in my opinion, in the Asian markets. And we're seeing more and more clients who believe the same thing.
Great, fantastic. Thank you so much for your time, Ed.
Thank you very much.